Hey everyone, and welcome. So after a few pretty rough days, the Indian market just staged a fantastic comeback. We're going to break down what happened, why it happened, and most importantly, what you should be watching for next. So let's jump right in.
And here's the big number of the day for the Sensex, a massive 427-point surge. That's a powerful comeback that really grabbed everyone's attention and signaled a huge shift in mood.
And just like that, the losing streak has been snapped. This wasn't just some minor gain, This was a really decisive statement from the bulls, putting a hard stop to that recent decline.
All right, so let's dig into the details of this big market reversal. We saw the Nifty get incredibly close to a major psychological milestone.
And this really puts the day's achievement into perspective. The Nifty climbed way up, closing right near that 25,900 mark. But get this, the total value of the NSE's market cap hit an incredible 464 lakh crore rupees. We're talking about a serious amount of wealth being added for investors today.
Now, a rally this strong is never the work of just one or two stocks, right? So which sectors were the real engines behind today's impressive run? Let's take a look.
And this chart here tells the whole story. The auto sector was really in the driver's seat, up over 1.1%, maybe on hopes of some good festive season sales coming up. Right on its tail were metals and a really strong rebound in the pharma sector. These were the heavy hitters that really pushed the index higher.
This is what I really love to see. This chart shows us just how broad this rally was. With over 1,900 stocks advancing compared to just under 1,200 declining, it tells us the good feeling was pretty widespread. This wasn't just a few big companies pulling everything up. It was a really healthy, broad-based rally.
But hold on, it wasn't all good news. Amidst all the celebration in the stock market, there was a worrying signal flashing somewhere else in the economy.
And here it is, the Indian rupee. It actually weakened to a record low against the US dollar, hitting 90.37. Now this is a really crucial point. While stocks were soaring on a wave of optimism, our currency was under some serious pressure. This creates a kind of economic contradiction that we absolutely have to keep an eye on. So that begs the question, right? If our own currency is showing signs of weakness, where did all this stock market excitement come from? Well, for that, we need to look outside our borders, because the main catalyst actually came from overseas.
Before we jump into the news, let's quickly nail down a key term, a dovish stance. Whenever you hear a central bank is being dovish, just think doves are gentle. It basically means they're leading towards lowering interest rates to help boost the economy, which is usually seen as great news for stocks.
And that's exactly what happened. The US Federal Reserve took a dovish stance and cut its key interest rate. Wall Street absolutely loved this news. The Dow Jones jumped over 1%. So you take that wave of optimism, you add in some positive news about US-India trade talks, and that whole wave just washed right over to our markets and ignited today's rally. So that's the story of today. But now for the million-dollar question. What does this all mean for tomorrow? Let's break down a potential game plan for traders.
Okay, for all the traders out there, these are the numbers to write down. For the Nifty, we're looking at support. Think of it as a floor where buyers usually step in right around 25,600. The resistance, that ceiling it's trying to break, is right where we closed. We're 25,900. If it can push past that, we could see more upside. For the Bank Nifty, the key zone to watch is between 58,600 and 59,300.
So how might you approach this market? Well, one strategy is to look for chances to buy on any dips, especially in those leading sectors like auto and metal. Second, and this is absolutely crucial, use trailing stop losses to protect your profits. And finally, keep a very close eye on the pre-open session to get some early clues about the day's direction. And that brings us to our final critical question. On one hand, we've got a powerful stock market rally. On the other, a currency at a record low. So are we seeing the start of a truly strong, sustainable recovery, or is this a fragile bounce that's just masking some deeper economic pressures? That's the big puzzle to keep in mind as we head into the next session.